Good evening, all. Ira Epstein with your Spider ETF wrap-up, and this wrap-up's for Thursday, and we are sitting here now on the 27th of January, 2022. Thanks for so many of you attending our live webinar. Viewership there, the amount of people in, right through the roof. I think we covered an awful lot of ground too. It's a lot of fun for me to do it. I'm going to be tomorrow on Fox Business at right after 2 o'clock Central Time with Liz Clayman. Appears that I think I'm going to be probably one of the regulars on a Friday now, showing up again. Backed away from that for a year, but it's time to go back and do it. We got a bunch of new equipment, so I'm going to look real pretty on TV tomorrow. So, you know, they can see me, and it'll be photo quality instead of that normal Skype. We just did it. So let's talk about where we're at. GDP looks fabulous. There's a real problem. You might want to go to places like MarketWatch, Wall Street Journal, and start reading about the Port of Los Angeles, what's going on right now. The ship amount and the amount that they're taking off ships is, again, a terrible amount. So we were lied to. They told us things are getting better. They have worked out how they can get everything off. They're going to crack into it. The ship count's right back up according to these stories. I know what I'm reading. It's in my newsletter tonight. I've already copied it. I give the credit to where it's going. We're back to 100 ships or whatever. We're not taking it off at the volume we should. The amount of dollar volume has dropped dramatically. What's going on? Why can't this administration get this job done? They're too busy picking judges, or hoping to, instead of dealing with the other things. They'll have their chance. Finish something you start. You went on TV, administration, you said everything's getting better, you're taking care of it. The volume numbers don't add up, unless the Wall Street Journal is wrong via MarketWatch, and that could be, but I bet on them over the administration. The second thing that we have to look at, that's a good tailwind for the economy in the end. It's not a good thing to happen, but that means we don't have a lot of inventory. There's going to be demand for that right on through, and that's a good thing. Omicron slipping away. GDP was up. GDP was up, though, in large part because going into the Christmas holiday, everybody was saying, buy now, you're not going to get anything. Everything's going to be off the shelves. And I'll tell you, when I go shopping at Kroger and other places, I do see the shelves are not as stocked as they used to be. Do you see the same? The prices are, of course, insane. We keep hearing, well, it'll get better. It's not getting better. When's the last time Procter & Gamble gave you a price increase and rolled it back? It's sort of like Starbucks. Tell me the last time Starbucks gave you a price discount. They're the first. If the coffee price goes up, we got to raise prices. Okay? When do they roll it back if coffee prices go down 30 or 40%? So these things stick, and that is the problem that I'm making. I'm not ripping Starbucks, although it's too expensive for me to go to. That's reality. I love their product. I can't afford a $5, $6 a cup of coffee 2-3 times a day. I'm not going to do it. I mean, I'm a guy that watches what I have, and you think you spend money crazy. You don't. You watch what you have. Okay. As we take a look at the markets right now, and we go to NVIDIA, and I'm going to write again. I'm going to carry this through a good part of early next week. Tell me the different markets you want me to replace this with, this particular chart. I will listen. I go in, I'll pick one, and we'll run with it for 5 to 7 days, okay? That's what I want to do. So you get to pick it, and we'll rip it apart. This represents, obviously, the chip maker and other products that they make. But you're near the lows. This market can't hold rally so far. You can see that the swing line has been breaking down. You started here with the breaks. You went into a bit of a pause. Then you resumed the whole thing to the downside. The market has gone from $350 almost a share to almost $200 a share. Monster price break. You talk about pain. That's a lot of pain. But now the market is trying to find its footing. It's starting to get it first at the 200-day moving average of closes and the Bollinger Band. For a while there, you just plunged under the band. Now you have a different look to the market. It's moved to the right-hand side. It's fighting right here. I would say that if you get a move over the highs of Wednesday at 240.57, you're ripe for a challenge into the resistance up here. I don't see anything on this chart that's going to start a bull market at this time. We even had a bearish crossover. Now let me show you this one because I said that this was going to happen. This is Wednesday, just yesterday. Now today, this is yesterday, you get the bearish crossover. So as that's happening during the day and I'm watching it happen, I'm going, it's not going to hold rallies. The moving average guys are going to sell into that. It's pretty much what happened throughout the day. You always watch what those are. But at the same time, you've got a countervailing force because suddenly you've got the 200-day average, which is a big, important number with the lower Bollinger Band. So then I go and I look at, do I have an embedded reading? And I have an embedded reading here. It's when you have several days or more where the blue and the red lines are going sideways under 20. They're embedded. It's all in my enhanced Bollinger Band course. And that means the pros are looking for numbers to get short on the other side of the Bollinger Band. And they're getting those numbers. That was yesterday, this is today. You had another opportunity and boom. I think the pros sold it and took some money off the table. They could still be short, but see this red line? Any close over 21 will be a signal to me that the market's going to try to make a run up here. Until that happens, I think the pros are content selling the rallies in the marketplace. There's a key moving average they'll do it at. It's none of these. Take the course. In Apple had stellar numbers. Anyway, I looked at it, they were great. Now, this market, like NVIDIA, is set up that if it starts up, you're going to lose the embedded reading. If you get over 164.39, I think you target wherever the 18-day average is to get back up to that number. So this market is in a key area. If everything fails here, then you go to the lower 200-day average. But I think the battle, unlike NVIDIA, is between the 100 and the Bollinger Band. It's the same type of chart picture, just a different set of averages. XLF, you came down to important zones. Now, as you got down to those zones, and I'll take you down right here, notice how the market's fighting at the lower Bollinger Band in the gray number, right through here, this gray. That's the 200-day average. That becomes the big battle zone. Trying to be short under a Bollinger Band, put a gun to your head. I think it's not a very good move. That doesn't mean you have a buy signal in the market. It means you're churning. If you rallied, the next resistance point, the 200-day, after that, the 18. The market is trying to work out of an oversold condition, which it is at this point. So that should attract selling, which it did. And where do you think the support is? Back here at that 200. So I think the pros are playing back and forth. Now, if today's high in the marketplace of 39.34 is taken out, it activates another one of my chart rules, which is if you take out the high of an outside day down within 2 trading sessions, the odds favor the market's going to make a run at the closest moving average or Bollinger Band above the market. That would be the 18-day average. Until that occurs, are you attracting sellers? To a degree. 30 is not a big number you like to sell, but it's there and it worked once. They might do it. They'll keep tight stops if they sell it. Disney. Do you see something on all these chart patterns that I've been showing you? The chart patterns are you've moved to the right-hand side of Bollinger Bands, one after the other. Disney's difference is all the moving averages are above the market. You got classic bearish action in Disney. I'm not saying the company's not a good company. I'm saying this is real bearish chart action, and until it's over, it ain't over. Now, it is oversold. It's not embedded, so I'll let somebody else own it, but it's still very bearish. Facebook, very bearish. Like Disney, all the moving averages are way above the market, not like the earlier charts we just showed from the video on. That's not the case. So the bears are here. You're not embedded. If you were, I'd get super bearish. No, it's oversold. I'll let somebody else play that game down there. The money's been made. Trying to play it until it re-embeds or does something else, no. Look at the 3 levels of resistance in XLI, 200-day, 118. What's going to happen here is unless you get a strong rally very shortly, The 18 days is going to attack those averages, and if it gets under it, it could create another wave of selling. That's just how moving averages tend to work. XSD, this is the semiconductor again. You move to the right-hand side. Notice the 200-day. I am certain, I was telling traders, I know what I do in my morning paid subscriber, that if you're short this market, and there were plenty of reasons to have been short early on, that is the cover spot. That's what I was saying. Okay, market's playing right at that number. That's all that I'm seeing out of it. That's the number that you got the whipsaws. Now you're back down. Today's low, 186.98, is a new low on the whole move. So these are big breaks in a market that I still like. I think the semiconductor companies have a good future ahead of them. Everything's going with semiconductors. What you don't want to get is too many new factories, because then it becomes a commodity. It's like TVs. Remember that when they were 4,000, 6,000, 8,000? I was looking for a new 70-inch TV. $700, $1,200, top end $2,500, depends what you need it for. But just giving you, things become a commodity, and that could be what this market's fearful of too. In the home builders, well, this is interest rates taking it down. We had an interesting set of events just happen. You had the new home builders numbers yesterday, stellar blowout to the upside, and pending home sales today were a disaster. I don't know which way to read it, but the chart action I know how to read. This is just bearish action. What happened the other day as you and I were talking? I said you got a bearish crossover. The 18 got under the 100. It's normally a bearish signal, and the market's making new lows into that type of move. Is it embedded? It is. Until you lose that, this market's still grinding to lower lows. In the energy sector, be careful. Even the Saudis and OPEC Plus realize you get too high in the energy, you start shutting down the economies that buy your product. Next week, they're going to say they're going to put out another 400,000 barrels a day. Okay. They're only doing 60% of that with all the increases they've given us already. So it's an increase, but it's not meeting the demand, and that's why prices are up. It's funny. You look at the stock markets crashing, and you look at energy prices going up. Now, obviously, if Russia decides to invade the Ukraine, all handles off, because I don't know what goes on. People might stop buying Russian crude and natural gas. Who makes up the difference? What happens in pricing? It's beyond me. So I'm watching, and I think that's what the market, to a degree, is also paying attention to. The gold just can't hold on to this inflation story. I know I was on Fox, and I'm going to be on Fox again tomorrow, and they asked me, what do I think of gold and some? I say, if it can grab into the inflation story and hold it, then you can get $1,900, maybe if things go crazy, $2,000, but it's just unable to do it so far, and it's still unable to do it. It looks at the Fed actions, and it pulls out everything saying, you win, Fed, there'll be no inflation. It's either an inflation hedge or it isn't. Which one is it? When you look at the gold miners, bearish. Unlike gold, these are out now bearish. This still has a higher high and lower low. These have got lower highs, lower lows than it had it. Target is right where it's at, basically. Still dropping down. Wherever it's going to find a base, it finds it. But I wouldn't press much under that Bollinger Band. If you have, your health hasn't been the best as we go back in time, as you can see. Not the smartest move that I think traders can make. Same thing in XME. So in the metals, which I like a lot long term, I think that we're getting to a point where they get interesting. I'm not a bottom picker. I am not saying buy them here. I am not saying anything. I'm saying they're getting into zones as a chartist where I'm starting to see something of interest here. They have a long way to go before I'd be telling you, hey, it's time to get long. You're not going to hear that. Copper's the strongest of the group. It doesn't want to get under so far key averages, but you really want to own it in front of the holiday now in China that's coming up, the lunar holiday, where they're going to be gone for a week, and they're the 50% consumption of copper in the world. These guys are all going on vacation. Maybe you should. TLT, higher lows, higher highs, right into that. When this market left the embedded status, that was the end of the game, in my opinion. And I realize how many people are saying, no, you got to be short there. That's not what my work is saying. My work is saying it's neutral. But the bigger story, and most people don't pay attention, the lower Bollinger Band and the upper are doing this. They're wrapping their arm around the market. It's going to need to develop sideways action. That's what I think it's going to try to do. Last in the euro, you broke through under the lower Bollinger Band. Okay, let's see how long it stays there. It won't be that long. But you're getting down into the 111, 110 area, possibly into the euro currency. It means we should book vacations. I'm Ira Epstein, and I want to remind you, we write about all this all day. We fill your email, or you can see it in our charting software packages. But it's all kinds of ideas that we do with news, and of course, that's on the firm. I put this out for you each day. At 9 o'clock, I want to be your go-to guy. I start recording because by then, by 9 o'clock Central Time, what's really happened is the government reports are out. I'm going to cover weekly charts, daily charts. I'm going to throw actual trade ideas, not this general that I do here. What do I want you to do? These are just some of what we cover. You know, I got NVIDIA. It's not up here. I rotate. You tell me what you want. I rotate with it. How do you get this? It's simple. You go to our website. Under the word research, you read all about it, and you take it from there. I'm Ira Epstein. You have a great day. I will talk to you all over the weekend. Take care now.